back to Life in Richmond with Hank Ballinger. Today we got a very interesting interview for you. We're going to talk to a banker, a local banker here in Richmond, Kentucky. And why that's really good is because on this channel, many times we have encouraged people to build wealth in real estate. If you're going to build wealth in real estate, many times you will go to a bank and get about 80%, maybe 85% of that loan from a bank to build wealth or to buy that real estate. Well, if you're going to borrow 80 to 85% of the loan from a banker, you need to get to know the banker. So today we're blessed, we're very fortunate to have David Soper with us, and we're going to talk to him, and we're going to try to encourage those who would love to get out of the rat race, those who want to maybe quit their day job or at least keep that day job long enough, maybe dabble in some real estate until they get enough real estate that they can quit their day job, and then they can get fully into buying and selling. But when you do that, obviously you're going to need some banker friends. So today we're going to talk about that very idea of how to make yourself look presentable. When you go to a bank, you want to make sure that all your I's are dotted, your T's are crossed, you're ready, and when they look at you, they look at somebody that they would like to make a loan to. So today, again, we're very blessed to have David Soper, a good friend of mine. Not only is he a banker, but he's a good personal friend. So David, tell us a little bit about yourself.
So currently I work for Monticello Bank. I kind of work my way up through banking, and today mostly focus on commercial lending and also run a branch here in Richmond, Kentucky. I do real estate as well. Hank and I are kind of on the same page. We kind of see eye to eye with investing and banking, and we're a lot alike in that regard. And it's not tough to have a good banking relationship, and things come easy with doing business with people that you like, and building that relationship goes well into the future.
Yeah, really does. So why, now when you were a young man, you look out, you got your life ahead of you, why did you decide to get into banking?
So it's kind of odd you asked that. I went to school, got an accounting degree, graduated and went to the workforce and started doing some blue collar work and worked for a factory for a little while. Made a little money and quickly realized that it wraps up so much of your time that you don't have time to focus on other aspects of your life, and kind of got me thinking what I wanted to do, if I wanted to work there for 40 years and retire, or wanted to pursue other avenues of investing to hopefully one day retire a little early and have a nice life. So I saw the aspect of time, and got me thinking maybe I should utilize my degree a little more, and started out in banking low level and kind of worked my way up. Just wanted to put that degree to use and do something a little advantageous that would give me some time in the future to free up.
Yeah. Before we started the interview, I was talking with David, and I was telling him that when I was growing up in Jackson County, Kentucky, when people, especially in Jackson County, because the idea in Jackson County is you get everything paid off. You get your house paid off, your car's paid off, your farm if you have it, your tractor, your implement, everything's paid off. That was the idea. And a lot of times when people talked about, I need to go to the bank and get a loan, it was like, it's a chore, it's going to be a headache, it's a nightmare, I got to go talk to this banker. But really, it's nothing like that. Really, as David stated, he did some blue-collar sector work, and bankers are people. They are only doing a service for the community. So with that said, what services do banks offer society?
So there's two primary services that banks offer society, and that's taking deposits and making loans. There's a whole slew of facets that each one of those categories represent, but for the most part, that's the basics of what a bank is for.
Yeah, so did you get that? He said they make loans if you want to build wealth. Now, again, I grew up in Jackson County, Kentucky, and the idea was pay everything off. Now, I was born in 1963. In August the 15th, 1971, President Nixon took our money off the gold standard. Oddly enough, from that point, I would have been about 8 years old. From that point, it has really never made sense to pay stuff off. That's old school. That's back when we had a gold standard. But nowadays, without a gold standard, it really doesn't make sense. Debt is a very good thing. So I know a lot of people don't like debt. They want to get everything paid off, and that's fine. But generally, debt is a good thing. It can build your wealth. And when inflation is higher than interest rate, it pays you to borrow money. So, David, for our viewers, when people come to a banker, or when they come to the bank and they're wanting a loan, whether it's for a car, a farm, real estate, income producing, what are you all looking for? How do they need to present themselves?
Sure. There's several ways that are solid, or are ways to obtain a loan, and things that you really need to do to look good in the banker's eyes. One of those things is, you need the sound income, you need a purpose that's worthwhile for the bank to entertain investing in, and you need a credit history that shows that you have the ability to make ends meet, plus you're responsible enough to make those ends meet. So with all that being said, the most important part is to have the income to support what it is you're asking for. You need to be able to pay the current liabilities that you have, as well as the loan that you're seeking, or whatever it is you need. In our case, we're speaking real estate here, so you need the money to not only cover what you have currently, plus that real estate that you're buying. Now, you can utilize, some of the rent from that property to help offset your income, especially in the commercial side. And also, it's important to build a relationship so that they know what type of character you have, and they feel comfortable letting you borrow money. Of course, they're going to do their due diligence with credit reports and any kind of OFAC reporting. They're going to know who you are pretty quickly. But it is a good point to meet with them in person and give them a little background about who you are, what you are, so that they get a comfort level too as well when they take your loan for a presentation for approval.
Yeah. So if someone comes to you, you can't just give them money right there. It's kind of got to go through a board to get an approval.
Unfortunately not. It'd be nice if it worked that way, and I think it did probably 50, 60 years ago. But today there's a process, and we have procedures and policies that we have to adhere to in order to make a loan for anybody, so that it's somewhat fair and equal for all people.
Yeah. Now, if someone come to you across the board, and this is kind of a tough question, across the board, what credit score are most banks looking for?
So each bank has its own policy, and that they adhere to different standards. For instance, our bank, we like to see a credit score above a 620. Anytime below that, you can sometimes mitigate it if there's a necessary reason to, or the person had a struggle or had a bad divorce and somebody mispaid and they weren't obligated to pay that and somebody else mismanaged it. But for the most part, you really need a credit score above a 620. And once you get above a 740, then you kind of get into the target range of the most advantageous interest rate for lending. So I would say as long as you're above a 620, 630, you should be okay with most banks.
Now, if you're at a 620, 630, 650, your interest rate very possibly will be higher than someone who had a 720, 750 credit score.
Certainly. So as we look at credit reports, we see that there may be some delinquencies or derogatory items on those credit reports that show that you're not necessarily as responsible as somebody who has the higher credit score. So there's a little bit more risk in, per se, somebody with a 620 or a 720. So the bank is going to be rewarded for that risk. They're going to charge a little more in interest just because there's a greater chance that the person with the lower score would default on the loan eventually.
And I think a lot of times also a person with a lower credit score, they could default on the loan, but also the bank may require them to put more down, right?
Sure.
More down payment. Instead of being an 80-20 split, the bank may say, well, listen, we're going to do a 75-25 split or a 70-30. The person would then have to come up with 30% of the down payment. So what you can do as a society, as somebody wanting to go out and build wealth, one of the best things you can do is work on that credit score. Get that credit score up. Your credit history, your credit score is going to mean a lot. It's going to save you a lot of money. Now, like I said a while ago, banks, really, you all want to loan money, right?
Sure.
That's what they're in the business for. So again, I used to think that banks were sitting there just because of the way I was raised and how everybody kind of like cringed when they thought, I got to go to a banker to get a loan. I thought, you know, bankers was there just to critique you and to turn you down for a loan because they're just waiting for that perfect person and they want somebody that's perfect. That's not true. They want to make a loan. So let's look at this. Bankers want to make a loan and you want to build wealth. There is not a better combination. They want to make loans and you want to take those loans. Good combination. You can build wealth. Make these people your friends. They're not your enemies at all. Don't cringe. Matter of fact, I tell people, when you go into a bank, always have something to drink. You know, that way you're sitting there talking with a friend, you take a drink of your water, your coffee, your soda, whatever. You're sitting there talking to a friend now. Don't just sit there real stiff and just, I want to borrow $100,000. You know, make them feel comfortable. You want to feel comfortable, and you want it to be something that is between friends. So they want to loan money, you want to borrow money. It's a good combination. This is the fly in the ointment, so to speak. Where do you see interest rates now? For those of you who may borrow money from time to time and you've got a loan on your house, especially maybe you had a loan from the early 80s and you had 18-20% interest rate on your house and you've refinanced in the last 3-4 years and you've got it down to like a 2 or 3% interest rate. Those of you who have done that, you realize the difference in 18% interest rate and 2%. Major difference in that payment. Where do you see, as a banker, where do you see interest rates going?
Sure. So there's a lot to it with the economy and the market and conditions of what are transpiring. Personally, this is just an opinion of mine from what little knowledge I have with the economy, but I see that over the next 6 to 8 months, the interest rate's probably going to stay pretty steady at where it is, plus or minus 0.25%, may go up a little, may go down, but it's going to stay pretty flat. I think in the long term, maybe a year plus, we might see the interest rates start dropping off some once the Fed kind of gets into a period of disinflation and, they start seeing the target of that inflation measure coming to a point of where they want it to be. They're going to bring those rates, they'll retract them a little bit. But for the most part, I say, 6 to 8 months, we're probably going to see pretty steady rates of where they are currently.
When the Feds start lowering rates, do you think they're just going to drop the bottom out of this thing, or it's systematically, slowly going to come down?
Well, Powell keeps mentioning the soft landing, so they don't want to, drop it fast. They want to kind of match the need with the demand there. But I believe that they'll probably drop it, 0.5% at a time. Something that's, pretty small, but, big enough chunks to where they can see some effects of it.
Yeah. Now, a lot of times people let interest rates stop them from buying property. I just recently put out a video, I don't know if it's come out yet, but if not, it'll be out pretty soon, about people really shouldn't let anything, whether it's the interest rates, the amortization time, the inflation. If you're going to buy a piece of real estate and it's income producing and it's going to pay you money, you're going to cash flow. Cash flow is you take all your income minus your expenses. If you continue to make money in and above all your expenses, that's cash flow. If you can buy property using 80% of the bank's money and I'm going to make money every month, I don't care what the interest rate is. That's a good deal. My tenants are making the payment. The bank's giving me 80% of the money, and I'm still cash flowing. I don't care what the interest rate is. Really, it's a good time. Even at 7 or 8%, it's still a good time to borrow money. And again, make the bankers your friends. It's a good time to borrow money. Looking at something else that's really controversial in the last few years, in probably during the pandemic, when interest rates got down, the Fed fund rates got down to 0, which means banks were loaning at 2, 3, and 4%. Housing market was great. You probably had a lot of refinances, right?
Sure.
Oh yeah. And I'm not wanting to get into any specific person's business, but what were some of the crazy when these people came in with what rate down to what?
We saw several. So there was kind of a couple different refinance booms, as those rates got down into the 2 and 3 mark, depending on if a 15-year term or 30-year term. But we saw several in the 6 and 7 range, dropping down to 4, dropping down to 3.25, and some even peaked or got below that 3% mark. Now some of those were 15-year terms, and just different parameters, different customers. But there was a period where people were refinancing about every year just to get a little bit lower rate. It was pretty impressive. There was a lot of savings to be had, and if you can get anything on a 3 or 4% 30-year fixed rate, you'd be silly not to.
Oh wow, yeah. And a fellow on YouTube named Jason Hartman, he talks about a lot of the home loans that's out there right now. People will not sell those homes. 40% of the homes across America are paid for. The others have a very low percent of interest rate on them, 2, 3, 4%. Why would you sell that house? Hang on to it. Even if you're going to move, hang on to that one. Just keep making that payment. If it's a 30-year amortization, keep making that payment. Go buy you another house. You got income producing on this one, and it'll help you pay on the other. If that suits you. I don't give financial advice. I give information. So anything else you want to say about banking before we kind of transition into entrepreneurship?
No, it's really easy. I mean, don't hold any fears or be apprehensive about going to speak with a banker. They're human too. They live in the same world you live in. Just go have an open conversation with them, and they'll help get you on the track. Especially a little small community bank. You go in, you sit down, you talk with somebody, and you explain your situation, and most of the time they're going to help guide you on the path to accomplishing the goals you have. If it's buying real estate, or buying your personal home, or setting up CDs, or whatever it may be, banking is super easy, and you shouldn't make it any tougher than it needs to be.
Right. So there's a lot of options, a lot of opportunities in the world. Years ago, when I first got into being an entrepreneur, I'd go to seminars, and all these guys at seminars were saying, there's opportunity everywhere, and I couldn't see it. I'd grown up in the blue-collar sector. I was a factory worker, nothing wrong with that at all. I know some really great people, knew some then, still have some friends. So great people. But what I wanted was to get out of that and to build a better life. So there's just a lot of options and a lot of opportunity. So again, borrowing money from the bank or even other investors is a really good way to build wealth, and it costs you a lot less. The more you borrow, you have what's called counterparty risk. The risk is on somebody else. I'm not saying put the bank at risk. You need to make your payments. If you take that loan out and you agree to pay it, you should pay it. But there's options out there, and again, bankers want to loan money, so great opportunity. Now, of the bankers that I know, most bankers are not entrepreneurial. Not that that's good, bad, right, wrong. It's just most of them, they are bankers. But a few of them are entrepreneurials also. They also buy real estate or other types of income-producing assets. So David just happens to be one of those, and that's something I really appreciate, and I can really appreciate anybody who is aggressive in life and wants a better life, so I can appreciate that. So how did you get into entrepreneurship?
So it's kind of odd. When I was in college, I worked for a couple of rental companies. We did odds and ends stuff, painted, did a little rehab work. kind of learned the business from a basic understanding, and didn't really know too much about it, other than I knew a couple people that had real estate, and they seemed to do quite well. Kind of learned some ins and outs of expenses and what you do with tenants, and how you cash flow a property and what that looks like with a little debt. And then as I graduated college and got a degree and finally got into banking, I started realizing the value of what real estate did for people. Not only did it provide net worth and build equity into properties, but it also gave them a source of income, depending on the type of real estate they were in. They could be full-time in real estate, do fix and flips, and make enough money to, support their income and family and things of that nature. So it really interested me to get into, and it took quite a while, finding that comfort level, and speaking with professionals like yourself. You quickly realize that, hey, you don't have to be a scientist or a genius to get into this. It's pretty simple. There's a pretty simple process, and just about anybody can do it. And it, eventually I took the leap of faith and purchased my first property, and things have gone well since then.
Nice. Now, you said something a while ago. You said something about a fix and flip. Explain that a little bit more in detail.
Sure. So fix and flip properties, people buy a property that's sometimes dilapidated or a little run down. They see that they can drive up some value and sell the property and then make a little income off of it by selling it to somebody at a higher price, lower or higher than what they had paid for it. It's a strategy that some people use, and some people do it full time. It's not something I like to do. I'm more in the buy and hold. When I buy something, typically I do keep it. Now, there are a couple exclusions to that. I've sold a couple pieces depending on location and things of that nature, but it's an advantageous thing if you're already doing the process with other properties and you have the contractors on hand. You can utilize those contractors to repair one property and sell it, make a little income, turn that income into your down payment into your next property. It's kind of a snowball effect.
Now, you had mentioned that you own some real estate. Do you mind telling us how many units you have?
Sure. So currently we own 3 duplexes and 2 single families personally, and I'm also in a real estate partnership where we own a development, and we're building some multifamily properties.
Nice. So it's very possible to have a day job and to have some income producing assets on the side. Now, again, what you decide to do, if you only want those as supplemental income, maybe get them paid off someday, and then eventually have that as just a supplemental income for when you retire, or maybe you can just build up and have them for several years, and about the time you get ready to retire, you sell out and you just take the money and live a very comfortable life. Or if you have systems in place, you may take that real estate, let somebody else operate it. You're still in Florida, you're fishing, they call you every now and then with a problem, but other than that, the money just goes into your account and you just keep fishing. So there's a lot of options with real estate. So again, I appreciate those who are aggressive in life and dive into real estate. Obviously, as a banker, you see a lot in the monetary system, in the economy and economics. What value do you see in real estate, say, over other assets such as stocks, T-bills, bonds, ETFs, cryptocurrencies?
So real estate has a lot of value that those other asset sectors don't really have. There's cash flow. You can make enough money off the property to pay for your living expenses or buy more properties. One of the primary benefits that real estate offers that these other asset sectors don't is depreciation. It's a tax expense that you get to deplete your income down so that you're not paying extra in taxes on all that earned income. And it's kind of a phantom number. That's not really there. It's a tax strategy and a loophole that the system allows that these other asset sectors don't allow. Another strong thing I like about real estate is you can control your investment and your return on investment more so than you can these other assets. A T-bill, you're going to get a preferred return, and cryptocurrencies is super volatile. you could, with real estate, you kind of control the success of that property and the success of, your net worth and the cash flow on that particular piece more so than any of these other asset classes. One of the best things about the real estate is it's tangible, it's in front of you. You go fix the property, you can appreciate the property and value. And I just think there's a whole slew of factors that make real estate a better asset class than other asset classes.
I would totally agree with that. When I look at just the depreciation that you talked about, you don't get that with any other of these asset classes. Also, let's say you put money in the stock market. Let's say it's $100, $1,000, $10,000, whatever. It's good round numbers. So let's say we put something in the stock market. The only amount I can draw back out of that is the amount I put in. So if I put in $100 and it goes up to 150, I can pull the 100 out with no taxes, the money I put in. It's only when I start drawing out the capital gains I've got to pay taxes.
Sure.
But here's the thing, I get no depreciation on that stock, and I have no use of that stock and no value to it until the day I pull it out.
Correct.
So if I pull the $100 that I put in out, I've gained nothing. But when I start pulling the additional out, I'm taxed. You can literally, with real estate, you can literally make money every month, cash flow, and at the end of the year, go file your taxes and have enough depreciation, and that depreciation will offset your income to where you still may not have to pay any taxes. Nothing else does that. So you're making money all year long, and then at the end of the year, file your taxes and don't have to pay a dime. So there is no asset class that does that I know of, other than real estate. Now, can you gain on Bitcoin or ETFs or stock or T-bills? Yeah, you can. But again, I don't think it's even close to the asset class that real estate is. Would you agree?
I agree completely.
Yeah. There's just so much you can do. Where do you see the entrepreneur, say, versus someone in the white or blue collar sector? And again, let me preface this question by saying there is nothing wrong with the white collar, the blue collar sector, nothing at all. I've worked in the factories for many years, so nothing wrong with it. But what do you see the value in real estate above those two sectors?
Sure, yeah, I agree with you. There's, we have to have white and blue collar workers, and, I've been there myself, still am. Most importantly, I think an entrepreneur has so much more potential to control their future and the success of their future. When you are blue collar or white collar, you work for somebody else, they give you a paycheck, you trade hours for that paycheck. As an entrepreneur, you're going to put in a lot of time up front. But if you do things the right way, and with real estate, it can compound, and in the future it can be very successful. And you get to the point where you stop trading time for money, and while you're sleeping, the money's working for you. Right. You still have tenants that are paying every month, regardless if you're putting in the time, energy, effort. Now, sure, there's some things you still have to do and responsibilities that come with that, but you have so much more control of your full potential working for yourself.
Yeah. So would you, as a banker, and would you encourage entrepreneurship in just the average guy? Maybe he's got a day job, he's working, he's trying to get ahead here. Would you encourage entrepreneurship?
Sure. I think, just with what we said there about the possibility of controlling the success of your future, I think it's a worthwhile opportunity. Now, it's not for everybody. It takes the brazen, if you will, to go out and be in those uncomfortable positions and put yourself in a position of not knowing what's to come or not knowing the answer to what's to come. But being able to mitigate that and get through those tough questions and utilizing a network, people that will help you and see you through the problems, I think it's a worthwhile opportunity. And maybe it's not for everybody, but for most people, it's a pretty simple task.
It's like everything else. It has its positives and it has its negatives. It has its pros and cons. So you're right. It's not for everybody. There's a certain segment of the population. I've talked to people before and talked to them about getting into real estate, and they'll say, no way do I want to fix a toilet. And I don't know why it's always a toilet, but it's always a toilet. I don't want to fix the toilet. Well, hire someone else to fix the toilet and you fix everything else. Okay, maybe that will work for you. So you've got to find out your niche, what works for you. I know when I used to go to seminars years ago, all these seminars says you don't want to go and collect your own rent. I collected my own rent. They said you don't want to be the one that sends late notices. I was the one that sent the late notices. They said you don't want to be the one that goes and talks to the tenants for every little problem. Well, that was what I did. So it can work. It might not be the best scenario for you, but it is a way to get ahead. And you've got to find your niche. Everything and exactly the way that you operate your property is probably not the exact way I do it, and vice versa. So what additional information would you like to give to our viewers just to encourage them about banking, about entrepreneurship? What information would you give them?
Sure. Don't be scared to reach out to a local bank. Even if your credit's not there, build a game plan to get your credit where it needs to be, to get your reserves up to where you have the money to go out and invest in real estate. Also, find some local people or some people that you feel comfortable with that are willing to share information. Hank's has a wealth of knowledge here, and he's been in the business for quite a while and is willing to help, anybody who's willing to listen. So, if you find a good group of people that can help you, help yourself, it's a worthwhile opportunity to go out on your own and be an entrepreneur and become a real estate investor. It's not something that takes a lot of knowledge. There's plenty of knowledge out there that you can seek with podcasts and plenty of very intelligent individuals who are willing to share that information for free.
Yeah. Now, you said some things there. You said they need to build up some money for the down payment. Okay. What generally, when someone comes to a bank to get a loan, what amount would you like to see?
So it kind of varies depending on, the bank and the policy of what they require, what they like to see. It's good to have reserves on hand. There's plenty of creative ways to finance properties and get into a property without having money down. For instance, real estate agents can use their commission and, that can be part of their down payment money, or seller credits, owner financing. There's so many different ways you can get into a property. But it'd be good to have, a good $10,000 in savings there, just to say, hey, if something goes wrong, we know that John Smith here has the ability to come out of this and find some solutions to the problems he encounters, and it gives the bank a better comfort level with the amount of risk they're taking by giving you the money.
Yeah. Now, David mentioned something else. He said there's other ways. There are a lot of ways. He mentioned also if there's other ways to get into real estate, but he said if you have real estate, you can leverage off of real estate that you have. If it has equity in it that's usable, let's say they will loan up to 80%, meaning if you had a $100,000 property and you only owed $40,000 on it, and they would loan up to 80%, they would loan you $40,000 from the 40 to the 80 against that property to buy another property. Now, yeah, you may either have two loans, or they may take the whole loan up to the 80,000 and put it at their bank, but you can borrow from those existing properties to buy additional properties, and that's very doable, right?
Sure.
Yeah. So a lot of times they really don't care where the down payment comes from. If it comes from equity from other properties, and I use this owner finance, maybe you get the seller that's selling you the property. If he does a 10% owner finance, that's very doable. So again, it may be that the bank would give 80% of the loan. You may get the owner, the seller, to do a 10% owner finance, and you may only have to come out of pocket with 10%. Or if you're borrowing 5% from Aunt May, you may only have to come out of the pocket with 5%. Now again, if you're going to borrow that much money, you're probably going to want to make sure that the credit score is pretty good, right?
Yeah, you need to be pretty solid.
Yeah.
You know, it just gives the bank a comfort level with the amount of risk they're taking, and you got to make the benefit worth it for the bank to go out on a limb to give you that money.
Right. Yeah, so there is a lot of ways to buy real estate. There are a lot of options, and I know if you've never gotten into this or you've never delved into it, it seems almost hopeless. It seems like, well, there's no way I can get this. And when I heard about owner finance, I thought, well, there's no way that the owner, the seller of that property is going to carry 10%. I've done that several times. I've taken equity out of property I have to buy additional property. It's very possible. So all these strategies that Dave's talking about, very doable, and the banks kind of encourage it. So it's not like you're going to come to them and try to pull something over. They know about these strategies, so they want to work with you. They want to loan money, you want to borrow money. So again, talk to your local banker. We appreciate David coming on. We appreciate your time. Anything else you'd like to say?
No, thanks for having me, Hank, and thanks for being a great friend.
Yeah, appreciate it. Appreciate it. David and I get into a lot of discussions in macroeconomics, so I really appreciate him coming on. We really like getting in pretty deep in the weeds with macroeconomics, so I really do appreciate that. Again, not all bankers get into macroeconomics, not all bankers get into being an entrepreneur and buying real estate, but I really appreciate David and what he does in life. He's a good Christian, he's a good family man, so that always means a lot. So again, thanks for your time, David.
Sure.
Thank you.